Welcome back to the Dividend Diplomat YouTube channel. You got your boys here, Laney and Bert. The Dividend Diplomat, guys, market's down. Fed's cutting rates, but not cutting it as much in 2025. So you know what that means. We're going to talk about why in this video I am loving and buying Realty Income while it is yielding 6%.
Oh man, guys, subscribe to this channel. Like this video, guys. Let's get to 21K subscribers for your boys here. The best dividend investors out here on all of social media. Bert, are you loading up on Realty Income crossing that 6% now that they've been down and dropped and kicked? The night that we're filming this here on December 18th, over 3% from the latest Fed announcement.
That's right. They dropped there because even though the Fed announced decrease of 25 basis points, they announced less future decreases in 2025. It was what, 3-2, Lanny, is I think what we said in our last video where we talked about it on Thursday. So the market didn't react favorably. It sent a lot of REITs spiraling because debt costs are going to be higher for longer in the REIT sector. Don't think it should have really been a surprise to people, Lanny. I think this one has kind of been teased for a little bit. Correct me if I'm wrong, but the signs were there that inflation was still hot enough to where the Fed might pull back on the rate cuts. Well,
yeah. That's the sign of what they're signaling to us, and we'll have to see really what's going to happen here.
yeah, nobody actually knows, but it creates a great opportunity us for in some high quality REITs, and that's why I'm taking a look here at Realty Income. They were in the low 50s, they jumped up to 60s when people thought rates were coming down. With rates being higher for longer, the REIT decided to come back down into the low 50s, and that is why I am loving them. They crossed that big yield threshold, and now that they're trading at 52.81 at the time of this video, they are yielding 6% now.
Yep, and then Bert, and that they just increased that quarterly dividend again, I believe, within the last week, right?
Yep, that's right. So they did their big quarterly increase. They're gearing up for 2025. But what I like about Realty Income, it's not just that they're with single tenants anymore. They're really working to diversify that business. Over the last few years, they've taken steps to move out of those single tenant properties and get them into data centers. They had that joint venture with Digital Realty a couple of years, so now it's fully leased. And Lanny, with the big AI boom, you at least want some exposure to data centers because those are going to become very relevant in the next few years as the need for data and storage increases.
Yeah, 100%. And obviously with how Walgreens has been, Realty is saying that they're not too exposed at 3.3% of the portfolio because, the closures aren't really impacting their footprint. CVS, similar industry, about 1.2% of the portfolio. So, again, 1/20th of the portfolio is pharmacy and drug related. So pretty limited from that side. They do a fairly decent job at being heavily diversified, with grocery stores being about 10% and Walmart being the larger of the tenants within the grocery space. So again, fairly diversified, nothing more than that 10% from a single industry standpoint. And I think that's why people find safety within Realty Income, just because of that diversification that they bring to the table, as well as being that monthly dividend income producing stock.
Yeah, that's right. And the diversification is fantastic. And the other piece is I've heard a lot about it is the dollar stores. Well, dollar stores only make up 6%. And dollar stores are going through some things, but they're not closing every single dollar store. You're not going to see dollar stores disappear. So if only say 10% of them close, that's only 0.5%. So they have a nice diversified base that it kind of insulates them from any one of those shocks. And when they do have their tenants, any of those tenants are paying and they're occupying. They have a 98.8, I think it is, occupancy rate. So their properties are filled up right now. So that's why they always jump to the top of my list of my favorite REITs, because how spread out it is, how insulated they are, even if they're not the sexiest stock right now.
Yeah, I mean, the metrics speak for themselves. We're going to quickly kind of go through those metrics, guys. Again, they're trading at 52.81. Now down 10% this year. Again, the price of funds from operations ratio, again, not the PE ratio, below 13, Bert. Now it's at 12.6, man.
Yeah, it's nuts. In their payout ratio for that new dividend is only 76%. And I say only because that's pretty actually low in the REIT sector. REIT sector is typically, you'll see 80 or 90 because they pay out such a high percentage of earnings, such a high percentage of FFO. 76 is very, very manageable, especially for a company that has such strong occupancy and stable rents right now.
Yeah, I mean, you're getting a way better yield from the recent yield. Again at 6% right now, guys. So, Bert,
Yeah, it's
you know, are you buying Realty Income in the IRA or a taxable account now at this point?
yeah. This one would be still in the IRA. I have my position in Realty Income in the Roth IRA. When we talked about income here on this channel, I talked about how Realty Income is now paying me $60 a month in dividends. So
Oh, that's it.
yeah, so I have a fairly sizable position. Why not make it more? I have other REITs that I like less in my Roth that have been losers and are still losers, and probably even a little bit more of a loser than Realty Income right now with this Fed news. Might just be time to roll that into Realty Income, take the loss, and just build one mega position there.
So you're saying Lahu
Yeah,
Zahar.
that's right. I mean, I'm a little bit more rosy. A lot of the naysayers will talk about where's the growth going to come from Realty Income. They might not feel as positively about doing the joint venture for the data centers, investing in the Venetian, getting into Europe, and then spinning like acquiring former ARCP Vera REIT and spinning off into Orion. Some people might view that as a negative and say they can't make their own growth, so they have to look outward and it's going to be expensive and it's a risk. They might lose focus. There are a lot of reasons why it could be a negative. Personally, I think it's a positive because I like the route that the investments are going in, but that's just my opinion. Everyone will have their own take on it.
I mean, what a great credit rating that Realty Income has as well. You got to feel really good about that. Their maturity schedule looks really solid. Um, just looking at their tenant listing as well, Tractor Supply, that's always going to be solid. Again, Walmart having a solid footprint with Sam's Club.
Yeah.
Again, they've got some of the largest tenants in the country, but none of them that are fairly exposed. Nothing, again, over 3.3% from a single tenant company. Bert, 6% yield, safe payout ratio, increasing dividends on a quarterly basis. Dividend aristocrat. What is not to love about Realty Income?
That's right, everyone. So let us know, what do you think about Realty Income right now? Are you loading up on Realty Income in the low 50s with that 6% yield? I'd love to hear your thoughts about this. REIT down there in that comment section below.
Guys, subscribe to this channel. Give this video a nice thumbs up. Let us know if you're not buying Realty Income, what are you buying post the Fed rate cut, the Fed announcement here? Now that we're seeing a little bit of blood in the streets, guys, let us know what stocks to buy are out there below.
If you haven't already, subscribe to the channel. Give this video a thumbs up, and remember, you're either with us or you're against us. Jack.
That was Bert the Herd and Lanny from the Dividend Diplomats. Over and out.